Hello and welcome to another update video about gold. So yeah, gold seems to go higher very aggressively. It was certainly the right decision to start to track a bullish scenario here against the 1839 level, even though it is still worth, I think, to be a bit skeptical about it. But this was a very aggressive move to the upside that we have seen here today and late yesterday. No, it's actually all happening today. So what we want to talk about is what the updated wave count is, because I don't think we can expect an ABC structure here to the downside anymore. I think it might have been the wave 2, but in that case, a very, very shallow wave 2, an unusually shallow wave 2, which is why I don't really trust it fully. But sometimes when the gold market goes, and I've mentioned that time and time again, that I'd rather be bullish and wrong than bearish and wrong. Why? Because when the metals start to run, gold and silver, then they run, and then they run aggressively. So I'm rather positioned on the long side as long as there is a reasonable prospect for a bullish scenario. And that is also why we have been observing this structure here so carefully, and why I have mentioned to you that even though I don't really like the microstructure here of the October low, yeah. Don't really like it, how it works out in terms of the proportions. We still track a bullish scenario from here, because what we don't want is to be left out, okay? What I would have liked to see is a deeper retracement in a wave 2, but we have to listen what the market is telling us. And the fact that we have a pretty aggressive move up here indicates that a low might be in. So we're just building probabilities here, right? So at the moment, price did move above the first resistance level. That's a bullish signal, inverse head and shoulders pattern here. And we did hold bullish support. So what we talked about yesterday was that we can go ahead and track the bullish scenario further as long as the 1839 support level is holding. It did hold, so now we look at higher. However, we've already reached the next key resistance level. We have reached this trend line here. Okay, and I think there are a few things that we now need to talk about. First of all, it's worth to understand that this is not yet enough confirmation to indicate that a lasting low has been in place, but it's certainly a reasonable prospect here for a larger rally to the upside. Okay, so as long as this 1839 level is holding, the focus can be on higher. But we also want to talk about, are there any higher support levels now that we can use? And yeah, I mean, it's all about, you know, which levels do we now see break. So first of all, we need to understand this resistance broke. I can take it out. We don't need it anymore. What is the next pivot? Okay, the next decision area, and I think we are currently in it. So if I'm adding now resistance here, and I'm gonna take out the 50% fib level. So it would be this area here, which is now the relevant Fibonacci, you could say pivot area, resistance area. I wanna see how the price now reacts in this area. This is going to be the next main, let me take this out, the next main resistance area that the price needs to move above 1938. If we can get a sustained break above 1938, then going forward we can use that further as support and move higher with it. Also, I would like to know what is the key target for the third wave, because if gold really bottomed, then the third wave should reach, well, in the gold market, I'm normally watching for the 1.618 extension for a third wave. I don't have enough price data to really count here the microstructure of this, but if this is a third wave, then I would like to see, I mean, at the very least 1974, but more likely $2,000. This is really what I would like to see. So let's just highlight that on the chart. What would be the target area from what I can see now? And there's a bit of a moving target, so it might still change as we climb higher. And it is sort of this, it's sort of this area here roughly, okay, that we're dealing with. between 1974 and $2,000 pretty much. The third wave in metals can always extend higher. It's a little bit like crypto sometimes, but that's what I'm watching. So first resistance that I'm watching here now is, or next resistance is 1938. And if this is bullish, we should get sort of into this region, roughly, okay? Then we will expect at some point a fourth wave and a fifth wave. And as we have this first 5-wave move up off the lows, then we can look for the next pullback trade setup, which would be this wave 2. Similar setup to here. Obviously, this was too small to be reliable, but nevertheless, I gave you the relevant bullish support level, and we will have something similar there. Now, what needs to hold in order to keep this setup valid, and I promised you a new support level that is a little bit higher. Invalidation point for this scenario is 1881. So any break below 1881 will invalidate this scenario. So you can use that level if you're looking at higher. There is a very, very early signal that we would get that this is breaking if the price breaks below the 50% retracement level. And this is at 1906. So a sustained break below 1906 will make this yellow wave count, the directly bullish count, less likely, and a break below 1881, as I just mentioned, will invalidate it. So that's a difference. Something makes it unlikely versus complete invalidation. So yeah, this should give you all the levels to watch. I think there is a reasonable chance that this wave 2 is already in, because when the metals run, they run faster. I did often say that, okay? And that's also why I gave you this support zone here, the larger degree support zone, then the smaller one here, even though the price didn't even touch it. Normally, I prefer a deeper wave 2 to have a more reliable wave 2. In 90% of cases, we get a deep wave 2, but when the metals are turning around, sometimes it is shallow. Sometimes it is shallow. We had something similar here, 1-2 setup. That was a 1-2 down there. Okay, very, very shallow wave 2 as well. And that's what the metals sometimes do, which is why I often say I'd rather be positioned on the long side and rather analyze a bullish scenario and be wrong, okay? And then just reposition lower than be focused on a bearish scenario, which I've shown you as well, but not as the primary scenario. Then be focused on a bearish scenario, and in the end, it was all bullish and the prices have already gone, yeah? That's because we need to understand when we analyze these charts how the markets are typically moving. Anyway, I hope that gives you all the information you need. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And yeah, last week we launched our stocks and S&P 500 service. If anybody's interested in that, daily updates about the S&P 500 and several stocks, also in video format, then check out the Patreon link in the video description. And have a great day. Thank you very much. Bye-bye.